Sameer, when you look at the way the U.S. markets, particularly the Dow and S&P, reacted to Theresa May's speech and the reception that she got, what does that tell you about the dynamic now and how U.S. markets are relating to global trade worries?
You know, John, probably the biggest thing is the market's still trying to find a bottom. So what started in early October, it's going to be a process. And, you know, in the past, we've used an analogy that's a lot like a broken leg. And once you've kind of gotten through the first part of it where you've kind of had that first sharp fall, you know, the second part of it is where you're just kind of trying to set that broken leg, where you just trade sideways for a while. And, you know, honestly, all these different political and geopolitical headlines are keeping markets under pressure. And so, at least right now, we're encouraged that we haven't hit, you know, meaningfully new lows yet.
So, David, what do you do as an investor in an environment like this? Which signals do you watch? Do you buy the dips, though apparently investors aren't doing as much of that anymore?
From our perspective, we think this is actually a good buying opportunity. Now, I think it's important to stress, it's very hard to predict when we're going to find the bottom in the markets, but if you look at the range of leading economic indicators, the chances of a recession in the near term look quite low, and that gives us confidence to say we think stocks will be substantially higher over the next 6 to 12 months. But again, until we get a lot more clarity on some of the risks that have been weighing on the market, what's the new path of rate hikes from the Fed, what's happening with trade, we could still be in a very volatile situation.
Sameer, looking strictly at how the market has behaved over the last several months, it's perfectly consistent with the idea that this is kind of a bear market in the making, just in terms of defensive leadership and the way the top was formed and the fact that rallies can't get any traction. On the other hand, you know, it could still be sorted out as just a messy correction. What would you be looking for us to be able to tell one from the other?
Sure. So I think probably one of the first things would be, you know, does the curve invert? And in the past, at least the last two cycles, the curve inverted at least a couple years prior to the market peak. So, I mean, if you look at the 2000 cycle, the curve gave you a false signal around 96, and then inverted again 98. And the last one inverted in 05, you know, prior to the peak in 07. And again, now I'm kind of referencing 2s versus 10s. This time around, we haven't even had that invert yet, you know, let alone a false signal. So I think that's one of the first things. The second would be the credit markets. Right now, if you look at high yield spreads, they're still below kind of their post-crisis average. Again, if this is the real deal, you know, you would expect those to continue to climb higher, and not only climb higher, but maybe do so in a disorderly way. You know, David mentioned those leading economic indicators. Those would need to kind of decelerate much more meaningfully. All those different things would need to happen in order for us to start to say, all right, there's something much bigger going on here.